Hey guys, just wanted to give an update. I didn't really feel like taking a shower, brushing my teeth or anything before I started making this video, so I figured, you know what, screw it. Let's just start recording. Why not? Thanks for coming back. In today's video, I think we're due for an update on my M1 Finance account. If you guys are new to this channel and you haven't clicked subscribe, make sure you get on top of that. Smash the like button if you want to support my channel. If you're new here, this channel is all about optimizing every aspect of your life. In this series, I'll leave a link to the playlist above. I'm starting a brand new portfolio starting from $0, and I'm going to walk you guys through the process of what decisions I'm making, investments that I'm making. That way you can see a portfolio grow from $0 into something actually valuable. And hopefully you guys can follow along with me, especially if you're new to investing and you want to get started. So what I'll be doing along the way is explaining what stocks I'm going to buy, why I'm buying those stocks, and then also introduce you to some strategies and some concepts along the way. That way you can learn some terminology and be able to talk about it yourself and have an understanding of what it is that investors are doing, and it sort of introduce you to the mindset of an investor. Now, I want to mention that I'm pretty new to this. I've only been doing this for the last year. I've been doing research on YouTube, reading articles and stuff like that, but I still consider myself a very beginner investor. So take everything I say with a grain of salt. Maybe use this to encourage you, or at least to see how easy it is to get started as a beginner. You don't really need a ton of knowledge. You can actually just get started and learn along the way. And you don't need to drop thousands of dollars right away. You can just start with, you can just drop in $100 and then just make recurring investments. So in my last videos, you'll see that I started an M1 Finance account. You can start this series from the beginning if you want to learn how to open an M1 Finance account, make a recurring deposit, and choose your first couple stocks. But in today's video, I'll be adding a couple stocks. I'll give you a little bit of information as to why I'm choosing those stocks and how I'm expanding on my portfolio. So let's not waste any more time and get right into it. Okay, so first things first, let's take a look at how my portfolio is doing so far. As of today, I have $769.53 invested. I'm only up 5%, which, you know, that's better than not investing at all. But it's actually been hovering between 5% and all the way up to 12%. So during those days where it's 12%, I'm like, wow, yeah, I'm like pretty happy with how my portfolio is doing. Now, the whole strategy that I'm trying to do is very conservative with my M1 Finance account. My idea is to go through dividend investing, diversify a little bit, and really focus on long-term growth and dividends. I'll go a little bit more into details on what that means if you're new to those terms. But generally, I'm pretty happy with that. Now, if you wanted to do something like day trading or swing trading, which is, I think, what a lot of people think of the stock market as, or at least that's what I thought when I was first getting into it. But basically, there is a lot of potential for much higher gains than 5% or even 12% if you're day trading. But my mindset here is that I'm gonna be doing this long term, and I don't have the time to do tons of research, look at balance sheets, study the numbers, and really invest a big part of my life into doing this. And also there's a lot of risk involved with doing that type of thing. So some people are literally doing all this research, buying when they're expecting for something to jump, and then selling after like a week, a month, or even a short period of time, like a day. And then there's other things you can do, like trading options, where literally you might be buying and selling within a matter of minutes or hours. So there's a lot of things you can do that are higher risk and have much higher rewards. And to be totally honest, I actually have a Robinhood account. I have BlockFi and Coinbase, and I've been trading a little bit of crypto. I have some other investments going on, but for the purposes of this channel, I think that the most conservative thing to do, and what I really recommend for anyone who's a beginner or just trying to understand, get used to it, and not incur too much risk, I think the long-term strategy is a much easier way to get in. It's a much lower barrier to entry. When you're making those first investments, a lot of times you get nervous because it's like, wow, my money could go up and down. So taking a conservative approach, it's a lot safer, and it's probably a lot more comfortable for most people. And then from there, I mean, if you have a couple bucks and you want to try something, by all means, give it a shot. I do it, everyone does it. Nothing wrong with that. The purpose of this series is to show you something slow, and it might be a little bit boring, but at least it's a bit safer. And this is a realistic option for anyone who wants to do this. You can do this carrying all the way through to your retirement and hopefully build something that you can live off of in the future. So that's the value of doing something like this. Now, taking a look at my M1 Finance account, we can see that I have $769. It's up 5% as of today. Looking at my dividend pie, it's set for 50-50. I'm using half IBM, half 3M. Now they're both growing at different rates, so you can see that IBM's performing slightly better. Now looking at the chart, you can see I've had this since November 2nd, but initially I just opened the account, threw some money in, and let it just sit there for a little while. But in a previous video, I set up my recurring deposits, and that's why you can see these sudden jumps. After I hold on to this account for a few months, it's gonna start looking a lot more like a line rather than stairs, I guess. But that's because I only have a couple investments so far. So I recently talked to you guys about dollar cost averaging, and I do plan to continue doing that, but there are a few things that are upcoming that might sort of alter that strategy. So if you saw a recent video, you'll see that I recently became debt free. And what that means is that instead of every paycheck paying money off into my loan, instead I actually get that extra money every single paycheck, and I can invest that. And I can use that to increase my emergency fund and invest it. And that's what I plan to do. Now, you'll probably see some of that soon in this account. However, I also have Robinhood and Coinbase, and I'm going to be making some crypto investments, and I'll probably share that with you guys soon too in another video. Now that we're in the new year, it is now going to be tax season. I really want to talk about taxes with you guys all soon because I've learned so much about taxes in the last year. I actually plan to do mine as early as possible. There's just a few things I need to prepare. Now, I actually am expecting a pretty large tax refund this year, which in my opinion, you should be aiming to get a very small refund, basically shooting for zero. But like I said, everything that I've done is very recent, and I actually am expecting a pretty large return. So what I wanna do is I wanna put that money into my account. So you'll be seeing some larger deposits, but realistically, I'm going to continue dollar cost averaging, throwing that into my account in several larger payments. That way I'm effectively dollar cost averaging my tax refund into my account. So as you can see, I'm building up this dividend pie, and I really haven't gone into detail about what dividends are. So I'll keep it really short for now, and I'll go into it in a lot more detail in a video in the future. But basically a dividend stock, or a stock that pays dividend, AKA a blue chip stock, is a stock that pays you just for holding on to their stock. So if we look at my activity, we'll filter it by dividends. And when I filter by dividends, you'll see that I have $1.14 coming from 3M, and I have $1.81 coming from IBM. Now that's money that I literally got paid cash. You know, it's sitting in my account, it comes in, and I can either keep that money as buying power and withdraw it if I want without having to sell any of my stocks, or I can automatically reinvest that into my account, which is what I'm doing to make sure that I'm compounding growth a little bit faster. There's another concept called FIRE, or FIRE community. It stands for Financial Independence, Retire Early. And that alone also deserves its own really thorough description. But basically the idea is that you can make investments that will pay you. That way your investments and your assets make enough money to support your life, and you don't actually have to work anymore. You can retire early. So by building this dividend portfolio, that's how someone with a FIRE mindset might be trying to set up their future. Now, I definitely need to go into more detail about what a dividend stock is and how all of that works. But what I want to do today is just build up my portfolio a little bit more and show you what I'm going to be doing in the next couple months. So the first thing I want to do is diversify. Diversification is a very, very important concept when you're investing in the stock market. Basically, the idea is that instead of investing into one or a small amount of stocks, especially things that are all in the same group, so for example, tech, which we know has exploded over the last year, diversifying is spreading your money across a bunch of different types of stocks or types of companies. So for example, there's tons of businesses that were doing really bad when all of the pandemic started and all of their stocks started to fall. Well, then you have other companies like Zoom who were thriving because during the pandemic, everyone needed their business. So if you had all your money in Zoom, then it would have grown. And if you had all your money in one of those other suffering companies, it would have dropped down significantly. Now, if you think about how your money would have performed if it was spread across both, what would happen is one would rise, one would fall, and they would basically cancel out. So by diversifying your funds, you're sort of lowering your risk, lowering your reward. You're allowing those things to grow together, cancel out, and make your portfolio a lot safer and a lot less volatile. Okay, so with that in mind, let's hop back into my M1 Finance account and make a couple adjustments to my pie. So I'm gonna click Manage Pie, Edit Pie, and here I'm going to add a couple slices. First thing I want to do is go over to this Funds tab, and I'm gonna search for SPHD. This is actually my favorite ETF. It is a high dividend, low volatility ETF. So what that means is, if you look over here, you can see that the dividend ratio is at 4.67%, which is a relatively high amount of dividends. So as an ETF, SPHD is actually a bundle of a bunch of stocks. And it's actually a hand-picked bundle of stocks that are all high dividend paying stocks that happen to not be very volatile. So this is chosen to be low volatility. It's already extremely well diversified for us, and it is high paying dividends. So they sort of just do all the work for us. If you invested in only this, you'd be extremely well diversified. You'd be very safe from market crashes and things like that. It does follow the market in some respect, but it's low volatility and you will continue to receive dividend payments. So doing just this alone is actually a really safe bet. So I do plan to put this in at a high percentage on my pie. So I'm gonna click Add Pie here, and then we're gonna add just a couple more. So let's go in and search in the stock section for KO, which is Coca-Cola. This is something I've wanted to own for a long time. I actually owned a little bit before, but I sold that while it was up to pay off my debt. Now we can see over here that it actually has a 3.17% dividend. This is about an average. I like to stay between 2 to 5%. I'm gonna add this to my pie. From my research, I know that Coca-Cola is actually a very safe dividend. Now, dividends can actually change. They can be cut altogether. It's pretty rare for that to happen because dividend paying customers are trying to maintain the trust of their stockholders. And they know that if they cut their dividend, a bunch of people are gonna sell that stock. So it's rare for that to happen, but keep in mind it does happen. Coca-Cola is one that, from my research I've seen, is a very, very trustworthy. They've been paying dividends and increasing them over a very long period of time. So I trust that their 3.17% is either going to stay the same or most likely grow a little bit over time. So by holding on to and dollar cost averaging into Coca-Cola, I will be making more and more dividend payments because I own more and more shares, but also because their dividend percentage is increasing, those payments will actually grow for that reason as well. So let's add this to the pie and let's move on to the next one. So now we're going to search for O, which is Realty Income. Now, Realty Income is a real estate stock. I like Realty Income because they have a pretty high dividend at 4.59% right now. They're a very boring stock. They're very low volatility, but I do believe they're going to continue to grow over the long term. So I feel comfortable investing in them. And at 4.59, that's a pretty high percentage. Another cool thing about that though is just like you pay rent every month and the landlords collect rent every month, they pay their dividend monthly. So every single month I can get my dividend. Once you start holding on to dividend paying stocks, you'll start getting notifications on your phone every time you get paid, which is kind of cool. So the fact that Realty Income does it every single month, it's really exciting to get more frequent notifications and see the effectiveness of your dividend investments. So let's add this one to the pie. Now let's go back to done, and now let's go modify the distribution. So originally I had 50% on 3M and 50% on IBM, and I'm actually gonna change that now. In the short term, what I want to do is I want to get a good amount into all of the other ones. So what I'm gonna do today is I'm gonna change them all to 20%, that way they're all just equal. Let's go 20, 20, 20, 20, oops, 20, and 20. Okay, total's at 100%, save, confirm. What we can see is that IBM and 3M are huge over here. And that's because you can see that at 50%, when I'm aiming for 20%, that's well over what my pie is going to strive for. So as a result, Coke, SPHD, and Realty Income at 0%, those are going to reach toward 20, and 3M and IBM are just gonna sit there until the others catch up. That way they all are at 20%. So the next 3 recurring payments that go into my account are going to go into those other 3 stocks until they reach up to the 20%. And M1 Finance is automatically gonna do this for me, which is really nice. I literally don't have to do anything. The money goes in, M1 Finance chooses where to put it. Once they're all at 20%, then the next recurring payments are going to evenly distribute across all of them to maintain that 20%. So effectively what I've done here is I've gone to my account, I've done a little bit of research. I found 3 dividend paying stocks that I like. They all have a relatively high dividend payout. Realty income is monthly, which I really like. They all have very safe dividend safety scores, which means I can trust that the dividend is most likely not going to decrease. Most likely in the long term is going to continue to increase by a little bit. And because I've added a few more stocks that happen to be in different sectors, I'm actually improving the diversification of my portfolio. So I have IBM, that's tech. I have Realty income as real estate. SPHD is an ETF, so that's already super well diversified for me. So if in the near future tech takes a hit, IBM might see a drop, but Coca-Cola might go up, or SPHD might just stay the same. And that's the power of diversification. Well, and that's it, guys. We're only about a month and a half in. We have our new portfolio. We're still under $1,000, but I want you guys to see that, especially if you're new, it's a slow process to get started, but if you start doing it for the long term and you just incorporate this into your lifestyle, this actually can be a very valuable thing. And you'll see that over the next year as my portfolio continues to grow. Now, if there's any topics that you want me to discuss or you have any questions about the things that I've done so far, definitely let me know in a comment below. I have a bunch of plans for this series. I definitely want to go into detail about dividends. I want to talk about FIRE community. I have a bunch of stocks that I want to be adding to my portfolio in the near future, and I'm excited in the near future to be able to start showing you all the dividend payouts I start receiving. The cool thing is this, once you start accumulating more and more dividend paying stocks, that can actually turn into a pretty large monthly payment. So if I'm getting $50 or $100 a month, that's like paying off your Netflix bill or paying off your electricity bill. Getting an extra $100 a month is like getting a little bit of a raise. If you're not subscribed already, the button's right there. Hit the notification bell if you want to be notified. Make sure you follow me on Instagram. I post there for all of my videos, and I'll most likely start posting a little bit of more optimization content on there as well. Thanks for watching. I'll see you next time, and make sure you optimize your life.